are now coming to prepare or build our format for the statement of financial position. And as you already know, in the building of the statement of financial position, there are two elements of financial statement you have to bear in mind. In the statement of financial position, we are going to deal with assets and liabilities. Sorry, it's supposed to be three, and what? Equity. You will never see any expense or income item here. If you will see an expense or income item, then that expense has developed into either asset or liability, or the income has developed from income to asset or liability. So the statement of financial position is built on the format based on the basic accounting equation: asset is equal to capital plus liabilities. That means the total economic resource of the entity is equal to how much the owner started the business with, in addition to the funds or the money he or she borrowed from outside. So that is the preparation. So we are going to prepare our statement of financial position based on the accounting equation. So bear in mind, A is equal to C plus L. Let's continue. So we start with the assets. Assets have been segregated into two. We have the non-current assets and we have the current assets. So we will deal with the non-current asset first. So we have the non-current asset. This one too, you can create two columns. It is not debit and it is not credit. Just subtotal and grand total. So you list your assets you have. You can have maybe property, land and building. So if it's no property, it's land and building, as you already know. You can have motor vehicle. You can have computer, or let's say plant and equipment. Plant and equipment. So name all the assets. You bring the total here. Someone can decide to bring it at the first column. You are not wrong, and you bring your final total. So this is the total non-current assets. These figures will be obtained from the non-current asset schedule. I have a video on that already. Total non-current assets. If you have other investments, it will come here. Investment. You add it, and you get the total assets. Total non-current assets. Yeah. Someone can decide to bring the investment above the total current asset and non-current asset. Yeah, correct. All that we want you to know, this is dealing with the asset that are held for more than 1 year. Then we come to the current asset. So with the current assets, there are those assets that are supposed to be held for more than less than one accounting period of 1 year. We have closing inventory. So the closing inventory is one item that will be considered as current asset. The reason is that the closing inventory, your income statement that you deducted from the cost of goods available for sale, the following year, that will be the first thing you will use. So we know that you are not going to keep it for long. We have receivables. Receivables are your debtors. You bring it here. We can have name it. We can have accrued income or income onlys. Accrued income. You were expecting to receive some income and it has not been paid to you. It becomes your current asset. The following year you'll be expecting to receive. Then we have prepaid expense, or expense prepaid or made in advance. You are supposed to pay electricity bill for only 2026 and you've paid to cover 2027. It becomes your asset as well. Then we have cash. Your cash balance will come here. Your bank balance will also come here. You add all this to the total and current assets, and you arrive at your total assets. So this is the asset section. This is how you are going to build it. Total assets. It's not difficult. And all these figures will be given to you in the question. The only thing is that some of these figures you have to do some workings on it, and I will take my time to take you through. Thank you. This is a continuation of the statement of financial position. After getting your total asset, then you come to the capital and liability section. Here we are not going to do like equal to, no, we say finance by, meaning those assets, total asset you are seeing there is financed by 1, the capital or owner's equity. So the capital will come. The capital, in case you got net profit in your income statement, it will increase your capital. If it is net loss, it will reduce your capital. So we say add net profit. We are assuming that we got net profit. Please, if it is net loss, you say less net loss. Have you seen it? So we are adding net profit. Then we will arrive at this figure. Then we less our drawings. The drawings in the trial balance you are seeing there. Sometimes you have to adjust this figure. Maybe the accountant couldn't record all the drawings. So you deduct your drawings, and this will be the final capital. Then we come to current liabilities. Current and non-current. So with the current liabilities, we are talking about those liabilities or present obligation within 1 year. We have payables or creditors. Then, aside the payables, what do we have again? We can have expenses owings. There are some expenses you haven't paid within the year. Becomes your liability. Then, income prepaid. There's some income you receive, but you receive more than what it was due for the year. That money is not for you, because you are working in 2026 and it has been paid for 2026 and 2027. Work out and take out the 2027's own, and it becomes income prepaid or income paid in advance. That income is for you. You are expecting it. So if it has been paid above what it was supposed to be paid for the year, find what is for the year and get to know what is not for the year, and it will represent the income prepaid. So expenses, owings, insurance, they can all form part of this. I think if there's any we have expense owing, let's think about any other current liability. Short-term loan, they are all current. Bank overdraft, they are all. So in case there's any list, you can add up. If there's any item you think is a liability but current, you can bring it here. So you can, don't double underline the capital section, because you are coming to add the liabilities. Then you come to the non-current liability. At that section, we are talking about liabilities that are for more than 1 year. You can talk about debentures, long-term loan, and a lot of items, long-term loan. But because of the space, I'm just doing 2 for you. You add this to this, so the 3 will give you your addition. So when you are done, the addition of the capital, current liabilities, and non-current liabilities should be equal to the total asset you did here. So if this is not equal to this, there is something wrong. But the moment you are done, you see that they are the same, you see that it has balanced as well. Okay, so that's all. If you have any question, kindly let me know. Our next episode, we are going to solve question and deal with adjustment for you as well. Thank you.